Okay, let's go to the banana zone.
Banana zone.
Banana zone.
The banana zone.
Think of the banana zone here. In the end, we're here for one thing and one thing only.
Banana zone, when does it happen? 26 is the year of the yellow fruit.
Wait. I know what you're thinking. 2025 was supposed to be the banana zone year. But how come we're poorer than we were 12 months ago? I know. So stay until the end. This is not going to be what you expect. I promise you, you're going to be surprised. Because we sat down with Raoul, the brilliant mind behind the banana zone theory and many of crypto's most profitable calls over the years. Now yes, 2026 is likely the year of the yellow fruit, the long-awaited banana zone. But
to be honest, the back end of 2025 has been shitty. It's made most of us question what the hell is going on. Is it all about the 4-year cycle? Are we missing something? Why are equities getting the party and we're not? Why is gold getting the party and we're not?
And Raoul is right, it seems we are missing something because it feels like we missed the alt season altogether this cycle and people are feeling the pain. Arthur Hayes, though, has a slightly more direct take.
So it's been altcoin season. It's just been too much of a pussy to participate in it.
So yes, late 2025 has felt like shit for the most part, and many people feel sidelined, like alt season never came. And let's not forget that it's not just the banana zone we're all waiting for, because first we need liquidity, and for liquidity we need QE, or quantitative easing, aka the magic money printer.
QE is here.
Quantitative easing.
Quantitative easing.
Quantitative easing. Quantitative easing.
Money printing, pivot, stimulus. But if you're waiting for the Fed to announce it as they have before, you are watching the movie in a foreign language.
However, as it turns out, it's not that simple. And to make things even worse, Arthur Hayes says it might never happen again.
So everyone knows that quantitative easing equals money printing equals inflation. So it can't be quite, there is no more QE. QE doesn't exist anymore. It will never happen again.
And Raoul also echoed this when he recently said,
Global M2 is slowing. We're going to see a correction.
Okay, so some say the banana zone is coming. Others say we missed it altogether and it's game over because we held the wrong assets and there never will be QE again. So which is it? Why is the fear and greed index flashing extreme fear with everyone on CT rushing for the exits while trillion-dollar institutions continue to buy the assets that we once hoped would become moonbags? Now the good news is, when we sat down with Raoul in Abu Dhabi, he explained how we're actually looking at the wrong indicators and we're thinking in the wrong time frames. Because the business cycle has been extended and the 4-year cycle is dead, which, as it turns out, is not the catastrophe we once thought it was. So stay until the end and find out if and when exactly a $10 trillion surprise is likely to send everything to the moon. Let's start with the obvious reason crypto Twitter is in panic mode: price. Solana topped out earlier this cycle at just under $300, despite so many CT pundits calling for $400, even $500 Sol before the end of 2025. Since then, Sol is roughly 60% down from the highs, and depending on when you bought, it's been months, not just days of down-only price action. That is enough to break even the most patient degens. But as it turns out, there is a silver lining.
I know we all feel like we can't have nice things. I know it feels like shit. But I honestly believe that with the work that we've done and speaking to all of the players in the industry, 2026 feels like it's going to be a lot different year than 2025.
And we certainly hope so, because look at these charts. Sol is down 33% over 12 months, and we barely topped the previous cycle highs. It's the same story if you look at Ethereum. It's trapped in a range since the November 2021 highs. Bitcoin, on the other hand, did break previous highs when it hit 125K, but is down to below 90K since then, leading everything else to bleed out painfully, including, by the way, digital asset treasuries, or DATs, which are all down bad since the highs. And if you look at the MNAVs, most of them are compressed. They're at or below 1. Quick plug here, if you do want to deep dive on DATs and whether or not they pose systemic risk to the Solana ecosystem, you can go and check out this video next. But DATs aside, most frustratingly, we see that ETF inflows are looking delicious, and institutions and TradFi giants keep buying and staking Sol, while retail continues to suffer.
We've had to put up some awful P&L swings, whether we're in Bitcoin or whether you were further out the risk curve, Solana, SUI, whatever. It's been bloody difficult. I get it.
So the first question on everyone's minds is, of course, when banana zone? And that's exactly what we grilled Raoul on literally the second he stepped into our booth.
But what will get people's attention is talking about the banana zone.
Oh, God.
When banana? We've been debating, do we focus only on the banana? Do we ask him about his thesis?
Nobody cares. They just want when number go up. When does the banana? Look, it got delayed because of this whole liquidity drain that went on because of the government shutdown and the various other parts of the plumbing system.
Now, before you panic and you think it's all game over, there is more.
But when you look at it, 2026, they've got to roll $10 trillion of debt. The only way of doing it is by injecting massive amounts of liquidity.
Going back to that time horizon and patience problem that we all suffer from on CT, Raoul had this to say.
I just think you're just looking back over last year saying, well, we didn't get nice things and therefore it's all over. There's too many tokens. It's never going to go up again. If we'd gone back a year and a half, you're like, look at fucking meme coins. We're making a fortune. Everyone forgets. And everyone has a pain tolerance that is minute.
So we simply had to ask the man if we should give up, pack up and off-ramp everything and just hold cash until the next cycle. He said no, and here's why.
So you have a year that's been choppy and miserable, and that's it. We've all given up. It's ridiculous. And it's like, you just don't need to do anything but just hold on to your tokens and just wait. And so it's all coming. So the banana zone is coming. It's 2026, it got delayed.
Okay, the banana zone is coming in 2026 and we all need to be more patient. That's all well and good, but why? Surely, if the 4-year cycle has stopped, it's all over and everything is once again going to zero, right? And before Raoul answers the question of the mythical 4-year cycle, I know we mentioned that $10 trillion surprise, which is likely going to change everything for risk-on assets, including crypto, and here it is.
We've got $10 trillion of debt to roll in the US alone in the next 12 months. This is the story. This is what drives number go up and drives adoption of the industry that we all know and love.
Then we asked Raoul why this links into the 4-year cycle and how exactly that $10 trillion debt refinancing is going to change anything for us degens who got caught with our pants down on 1010 with way too much leverage. And his answer was a bit of fresh air.
4-year cycles.
Yeah.
Are they dead?
There never was a 4-year cycle. It's based on the debt refi cycle, which was 4 years. But then in 2022, they extended the debt maturity out by another year. So it's now 5 years. So it actually took me a while to figure this out as well. Is that, okay, so now this time it's going to be 5 years. What's the next cycle? We don't know until we see what the debt maturity is at the end of this cycle. So it's 5 years. So there's no magic Satoshi given from the gods. It's 4 years and you shall have 4 years. It's none of that bullshit. It's to do with macro, it always has been. It's to do with the debt refi cycle. So if we've got about $10 trillion to roll in 2026, that's when liquidity comes. That should be the end of the cycle before we come down the other side again.
Okay, 4-year cycles are dead, and we're looking at a 5-year debt refinancing cycle. And that's great news going into 2026 because we have $10 trillion that has to be refinanced. But hang on a second, we just heard Arthur Hayes telling us with some serious conviction that QE is also dead. So Jerome Powell's magic money printer isn't going to come and save the day, right? Well, it turns out that's wrong, and they just changed the name.
So the new term is reserve management purchases. And when it first came out, I spent a lot of money on macroeconomic research, and I said, okay, what is reverse management processes QE or not? And the majority of the technical monetary market plumbers said, no, technically this is not quantitative easing. And there's a bunch of reasons why. Then you get some more of the people who have a little bit more cynical, like myself, who write macro stuff. And you say, is this QE? And they say, technically no, but yes, it is. It's going to achieve the same purpose.
So yes, the TLDR is, as it turns out, the Fed has essentially rebranded QE and pivoted away from the term because printing money is bad for people who don't own assets, because it increases the debt ceiling and it contributes to inflation. And by the way, this can't be understated. The working class, which makes the economy function, the people who go out there every day and sell their time for dollars, the very same dollars that are being debased every day by inflation are disadvantaged by this. Prices rise, people can't afford things, we print more money, which creates more inflation, and we're stuck in a cycle. But nevertheless, the magic money printer can indeed be turned back on in 2026 and make all our troubles go away, number go up, everyone's happy again. And speaking of everyone, it is important to note here that Bitwise CIO Matt Hogan recently said this about the growing divide in sentiment between retail and TradFi.
It's a really interesting time in the market because it's almost a tale of two markets. Crypto retail is in max desperation, and the market for sort of crypto native retail is just more depressed than I've ever seen it. I think that market is close to a bottom. And interestingly, that market is still bullish. When I go out and speak to institutions or financial advisors, they're still excited.
Now, yes, retail sentiment has been moving in the opposite direction to TradFi sentiment, and we know this stems almost exclusively from price action. We also know that 4-year cycles are dead, but liquidity is coming through that $10 trillion debt refinancing, even though the Fed won't call it QE. Great. So the real question that remains is what Raoul thinks we should, or rather shouldn't be doing as retail traders in 2026 to make sure that our future is brighter.
Another one of these questions is, I think going back to your thesis from a couple of years ago, that young people have about 5 to 6 years to unfuck their future.
Yeah.
So what are things that we might do in the next 12 months to fuck it up?
Oh, what you can do to fuck it up? Oh, there's so many good methods. One is to listen to your friends.
Okay.
Generally, we've all got that bag of shame. Yeah. And in that bag or wallet of shame has the meme coins that your friends pumped you, all of that stuff. So that's a really good way of destroying money. The other good way is definitely use as much leverage as you can, because you are going to, with 100x leverage, you're definitely going to make your fortune. Definitely. The other thing is just click on any website, particularly if in an NFT space, stuff like that. Just click on all the links anybody sends you. Do that and make sure you keep all of your assets in your hot wallet.
On your phone.
On your phone. Yeah. That's a really good trick as well. It's generally, those are the ways definitely you can destroy your own capital happily.
Now, looking ahead into 2026, I want us all to walk away from this with one final lesson from Raoul, which is that 90% of all price action is explained by one single factor.
So if I was to really pressure you to say, what are you most excited about in 2026? You're going to insist it's liquidity.
Yes, because 90% of all price action in Bitcoin and crypto overall is explained by one macro factor, liquidity. 90% correlation. With the NASDAQ, it's 97.5%. We've never had this dominant a macro factor in history. So we don't have to care about one thing, which is why I always say when people ask me about all the things, tariffs or whatever, I just say it's all noise. Because if 90% of all price action is explained by one thing, then that's all we care about.
Everything else is a rounding error.
It's all a rounding error.
So there you have it, folks. Liquidity is coming. Institutions are only just dipping their toes into an asset class which, by most measures, is set to continue its rapid growth in the coming years. And events like the government shutdowns and tariffs are just noise and rounding errors in an otherwise upwards trajectory. Naturally, none of the information here is financial or investment advice. We just wanted to share some of Raoul's wisdom about markets and macro indicators going into the holiday period. So if you enjoy these deep dives, then please like the video so more people can see it. And of course, subscribe to Solana Floor for more deep dives from across the ecosystem. Merry Christmas, Happy Holidays, and see you all in 2026.